Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlet Fu. We're counting you down to the closing bell, and here to help take us beyond the bell. It's a global simulcast with our friends Tim Stenovec and Simone Foxman. Welcome to our audiences across all of our Bloomberg platforms, television, radio originals, and our partnership for those folks watching this on YouTube. Market screen across the screen here, Tim Stenovec. But before we dive into that, I do just want to bring some breaking news across the Bloomberg terminal a little while ago. Another big headline on Walt Disney Company. This time said to be cutting their target for Disney Plus streaming subscribers. Remember, a little bit earlier in our show, we told you about the news here that Disney is exploring a sale of its ABC News business, and now further reporting by our crack Bloomberg staff here, learning that Walt Disney expects to fall tens of millions of subscribers short of its last publicly stated 2024 target for the Disney Plus streaming service.
Okay, we had a great conversation with Chris Palmieri out in LA and David Weston here in our studio. Of course, David spending many years at Disney, many years as president of ABC and ABC Television, ABC News, I should say. And David made the point that when it comes to content, even if this deal were to happen, that it sort of depends on the structure of the deal when it comes to content from the network being included on streaming services. Because a big question I have is Bob Iger looks to, like he said, everything's on the table when it comes to potentially selling assets. How do those asset sales affect the content available in the streaming push that he's doing?
All right, hold that thought here for 1 second, Tim. We just want to get you the closing bell numbers here in New York. What has been a very positive day here. Maybe that's partly because of the economic data. Maybe it's partly because of the latest IPO to come to market. ARM having a big day, up more than 20%. The Dow Jones Industrial Average going to finish the day higher as well, up by about 1%. The S&P 500 closing above that 4,500 level, up about 0.8%. Similar move on a percentage basis for the NASDAQ Composite. And the outperformer on the day, believe it or not, the Russell 2000, higher by about 26 points or 1.4%.
I feel bad for Simone on days like this where she has to find decliners. In the S&P 500, 433 stocks in the green today, moving higher. Only 68 of those stocks in the S&P 500, Scarlet, in the red.
Yeah, more than 5 stocks higher for every one that is lower on the New York Stock Exchange. So when you look at the sector groups in the S&P 500, no surprise, everything is green. Banks, real estate investment trusts, and auto companies are leading the advances. They're each up by at least 1.5%. The laggards here are healthcare equipment companies. They're barely positive. Diversified financials, interestingly, given that banks are higher as a group. Diversified financials gaining about 0.2%, and pharma companies just barely eking out a gain as well.
Well, let's take a look at some of the gainers on the day today. Shares of ARM really popping toward the end of the day today. We were talking about them hovering around $58 a share. Look at that, closing up more than 24% to $63.59 on their first day of trading. The company raising $4.87 billion in the year's biggest IPO. We know what happened today. The big question is what happens in the next few weeks, what happens in the next few months. Is this going to be a catalyst for other IPOs from the companies that have been on the sidelines over the last couple of years? It's been the deepest, longest listing drought since the financial crisis back in 2009. Let's take a look at shares of Disney with all of this breaking news happening late in the day. Shares still higher by 1.2%, despite the headline that Romaine gave you moments ago about adjusting its own forecast for its own streaming subscribers, up 1.2% on the day. This after Bloomberg News reported that the company's held exploratory talks about selling its ABC network and TV stations to local broadcaster Nexstar Media Group. That could bring in $4 billion, according to estimates from Bloomberg Intelligence.
And we should just point out real quick that Nexstar also had a pretty good day, up more than 5% at the close.
So investors could optimistic that a deal could be beneficial for Nexstar too. You don't often see that, Romaine, when it comes to potential acquisitions, right? The company that's doing the buying sometimes gets punished when that news comes out. Again, nothing has been confirmed at this point, just reporting from our team. Let's talk about AT&T. Shares of the company finishing higher by 3% today. We heard from the company's CFO at the 2023 Bank of America Media Communications and Entertainment Conference. The company said it expects third quarter free cash flow in the $4.5 billion to $5 billion range and remains on track to generate full-year free cash flow of better than $16 billion. Investors certainly happy to hear that news.
Yeah, Tim, I have to point out that it was challenging to find some decliners today, but I did do it. But they're not down super much. HP, though, falling as much as 2.5%. Looks like it closed the day down 1.8%, as Warren Buffett's Berkshire Hathaway disclosing that it had sold a close to $160 million stake. Remember, Berkshire Hathaway, one of the company's largest shareholders. So this adding to some of that disappointment around the outlook that it put out last month. Bloomberg Intelligence also saying that it reinforces rising concerns about the printmaker's ability to stabilize and grow free cash flow in the immediate term. Also looking at shares of Robinhood, they were down a bit more earlier in the session, but now closing down about 0.5%. They're reporting monthly active users for August at 10.6 million, but that's down from July's 11 million, and Goldman Sachs says that's below expectations. Also, finally, looking at Visa, this is an interesting one. We got news after the close yesterday in a filing that the company is exploring ways to allow some of the largest banks, which are shareholders through a very unique share structure implemented pre-IPO, to sell their shares up to half their stakes. So the market's kind of digesting exactly what's happening here. We're seeing shares down a little over 2.5%, but Morgan Stanley says this may reduce uncertainty. Meanwhile, Jefferies says they expect to see some near-term skittishness.
Well, as far as what went on in the yield space, interesting moves higher in yields pretty much across the board here. Your two-year yield now moving a little bit deeper into that 5% territory here. And we should point out it was a pretty volatile day. Of course, anytime you have big economic data, you're going to see these big swings. But the net effect is a modest uptick in yields here at the close. 4 basis points on the 2-year, 3 basis points to 4 on the 5 and the 10-year, and your 20-year yield and 30-year right now also up about 3 to 4 points. So almost really, when I look at this now a little bit closer, almost a parallel shift here in the yield curve higher.
Yeah, definitely. All right. And of course, we talk about this idea that the case for a soft landing has been building. The Atlanta Fed GDP Now model now shows a move lower. They're now looking for a real third quarter GDP of 4.9%, so below that 5% mark versus 5.6%, a few weeks earlier. I wonder how you fold rising oil prices into that, right? Because that's just been going up and up.
All right, I just want to we actually are getting earnings, believe it or not.
Still,
Earnings season never ends, as Katie Greifeld always likes to remind me. Adobe crossing the wire right now. Those numbers coming in, at least as far as their fiscal fourth quarter numbers, the adjusted EPS, 410 to 415. That's the guidance that they're giving, guidance for the fiscal fourth quarter, 410 to 415. Now, even the low end of that range is above the average of analyst estimates here. As far as their forecast for fourth quarter revenue, $4.98 billion. We'll just round it up to $5 billion. To $5.03 billion. And again, the lower end of that range is about on the nose, was what the street was looking for on average. Now, as far as the quarter that just passed, the fiscal third quarter here, also a beat on a couple of key metrics. Only minor beats, though. 409 on EPS, a minor beat there, and $4.89 billion in revenue, also a minor beat on that. Shares up 2%, about 2% here in after-hours trading.
Yeah, and what's interesting here is that analysts are going to be looking for some signals about how corporate budgets are looking. Corporate budgets have been tight, but do they see stabilization in the New Deal pipeline? We will hopefully get some more commentary on that as we hear from the executives later this afternoon.
We actually spoke to a president at Adobe yesterday. He was on our program. Adobe made a big announcement about Firefly and the corporate tools that they had available, the enterprise tools.
Yeah.
What's that?
I used to love that show.
The show Firefly?
Yeah.
Well, look at what's on the screen right now, this generative fill that they can do, Romaine. We talk about AI and what companies are promising with AI. Yeah. They said they've been working on this for 10 years, and this is legit stuff here. Wow. I mean, they're literally generating images out of nothing. I mean,
it's really cool.
It actually is really cool. And there's some, they argue, serious economic implications for the company of doing something like this.
I feel like this is going to be available on the iPhone in like 2 years.
Yeah, it's a really good point. You can search for just people doing demos of this on TikTok. It's actually a thing.
You know, one thing to keep in mind when we do get to the conference call is whether the company says anything about Figma, which is looking to buy, but of course the EU has been stopping them and saying, wait, we got to look into whether this dampens competition. Yeah. And of course, this is a huge strategic purchase for Adobe.
I do want to go back to the Firefly thing, because I think we talked to the same person yesterday. And it's interesting, too, because there was always this idea here that most of these AI tools, at least in terms of being revenue generator, is going to be much more about selling to corporations, right? The idea that the applications there had much more profit potential. But Adobe had talked a lot here about kind of catering to just regular folks, if you will, the people that would use a Photoshop or Illustrator or something like that, and that there was actually a lot more opportunity there, at least in their view, than in some of the other spaces.
You know, but the challenge, I think, for the workforce, not so much for Adobe, is do people lose their jobs because they have all these tools at their disposal? Now, I will say the president of Digital Experience, who was, I think, on both TV and radio yesterday, didn't really answer this question.
No, he didn't
have to
answer.
say.
No,
He
I mean,
doesn't know
look.
yet.
Look. We're all losing our jobs at some point, right? I mean, that's just the way it works.
Someday.
But,
In the
I'm
future.
doing
The
decliners
reality
until
check
9.
there.
but in all seriousness, I mean, that's still so far in the future. I mean, in terms of like en masse, when it starts to really replace things. I think most people say that's so far in the future. But you had all these executives in Washington yesterday. I mean, not necessarily the right executives, but you had some big executives there. And I mean, my main takeaway is that there really are no guardrails right now. I mean, companies could kind of do what they want, and by the time Congress catches up, well, they're going to be behind.
Yeah, I think catches up is the key phrase there,
Yeah.
Romaine. Do you think they actually understand?
No.
The members of Congress understand what
No,
should be
I think
regulated,
I
should
seem
not
to
be
remember
regulated?
hearing from just 2 years ago where people were
There
still
it
trying
is.
to explain them, how Facebook sells ads, and that was just 2 years ago. So you think they understand AI?
Sir, we sell ads.
Yeah.
I think that's what Mark Zuckerberg said.
Just
Guys,
a
that is going to
series
do
of
it.
tubes, my friend.
That is going to do it for our cross-platform coverage. Coming up, we're going to be seeing you tomorrow, same time, same place.
Oh.
Don't go anywhere, though, because we got much more of our program coming up in a minute, and you guys are doing more on TV.